We're all sold this big, glamorous story about how to build wealth, right? It's all about risky stocks, genius startup ideas, or some secret formula. But what if I told you the real path to getting rich is, well, the exact opposite? What if it's simple, predictable, and maybe even a little boring? Let's dive in.
I mean, really, think about that for a second. We're just surrounded by these flashy stories of quick wins and overnight millionaires, but that's rarely how lasting financial success is built. The truth is, the methods that actually work are often ignored precisely because they aren't exciting. It's all about habits, not jackpots. And that right there is the absolute core of what we're talking about. Building wealth isn't really about timing the market or finding the next big thing. It's about mastering your own behavior. It's about understanding the fundamental psychology of money. And once you get that, I'm telling you, everything else just starts to click into place.
So where do we even begin? Well, we start with the absolute basics, the simple language of money that, and this is kind of crazy, most of us were never really taught. Getting a handle on this language is the key that unlocks your ability to make better financial decisions for good.
It honestly boils down to this one simple, powerful distinction. An asset puts money in your pocket. A liability takes money out of your pocket. That's it. Think of it this way. An asset is like your employee, working around the clock to earn for you. A liability, well, that's a demanding boss that you have to keep paying day in and day out.
Okay, so let's get a little more specific. An asset isn't just something you own. It's something that actively generates income. That's the magic word. A dividend-paying stock, a rental property that brings in rent each month. These are assets because they are literally putting money into your pocket, even while you're sleeping. They work for you.
And on the flip side, you've got liabilities. A liability is just a constant drain on your resources. That car loan, your credit card debt. These things don't just cost you money one time. They cost you money every single month, actively working against your goal of building wealth.
So here's the crucial point. Once you know the language, once you really understand the difference between assets and liabilities, you can build the single most powerful wealth-building habit there is. It's a simple idea that completely flips the script on how most of us manage our paychecks.
Just look at the difference here. The common path, the one most of us are taught, is to earn money, then pay everyone else, the landlord, the credit card company, the phone bill, and then maybe try to save whatever is left over. The wealth path just reorders this. You earn your income, and the very first bill you pay is to your future self. You invest first. Then you pay all your other bills with what's left. It's a profound shift.
And this is the rule. This is the entire game right here. That money you pay yourself with, it's not just for sitting in a savings account. It's specifically for one thing, buying assets. It's for buying things that will over time put more money back into your pocket. You're prioritizing your financial freedom before you fund your day-to-day expenses.
Okay, that all sounds great in theory, but how do you actually do it? Let's get practical. Here's a simple framework you can start using like today. It's called the 15-65-20 rule, and it's an amazing guide for putting that pay yourself first principle into action. So here's what it looks like. Nice and simple. For every dollar you take home after taxes, you're giving it one of three jobs. 15 cents immediately go to investing. 65 cents go toward your lifestyle and all your spending, and 20 cents go into savings. It's a super clear, simple plan for your money. And this table just breaks it down perfectly. That 15%, that's your pay yourself first money. It's non-negotiable, it goes directly into acquiring assets. The 65% is for your life. Rent, food, going out, all of it. Now, that 20% for saving is crucial, and it's different from investing. Savings are for your short-term goals and your emergency fund. That's your safety net so you never, ever have to panic and sell your investment. So when you put all this together, you understand the language, you pay yourself first, you follow the simple blueprint, what does it actually look like day to day? Well, it looks like a handful of simple, repeatable, and, yep, truly boring habits. This right here is the secret sauce. First, you automate your 15% investment. Set it and forget it. On payday, that money moves to your investment account before you can even think about spending it. Second, you track your 65% spending. You don't have to be obsessive, just be aware. Third, and this is a big one, you review your investments maybe once a year, not every day. Wealth is a crock pot, not a microwave. And finally, you live below your means. It's the most boring foundational habit that makes this entire system work. And that's really the ultimate takeaway, isn't it? The flashy stock picks and the get-rich-quick schemes, they get all the headlines, they get the attention, but they're just a distraction. The real, quiet, and reliable path to wealth is built on consistent, disciplined, and boring habits. So the question is, Are you willing to be bored to be wealthy?